Time for another stock review. This time, HIMS and hers, and we're getting a little bit saucy on this one. It's not a Playboy video this time, but it is HIMS and hers, and it does get a little bit on the sexy side. So look out, because you have one of our famous sexy videos. Oh yeah, you'd never see anything like it, but you can't believe it. You come here for the money, and it gets all sexy. Right. Okay, and this is the very first video I have made with these new glasses. I'm struggling to see, and I've got some glasses. I'm trying them out. Maybe they'll work, maybe they won't. What do you think? Leave me your thoughts in the comments below. Does it make me look more influential, intelligent, silly? I'm sure I'm going to get all sorts of comments. Leave them below. Anyway, let's get straight into it. What is HIMS and hers other than being a sexy stock? Well, let's go straight into it. If it's your first time here, tap the like button. Consider subscribing. This is being made today in a members-only event. It's to honour all my members. We're coming up to our 3rd anniversary in a week's time. 3 years I've been sitting here. And Leah, quick, look what Martyn is watching. I'm not watching it. I'm making it. You're the one watching it. Right. Okay, that was a comment there just coming in from one of our senior members, MSK. I love it. All right, let's crack on. That seems like everyone's enjoying the him and hers, the B-roll. I'll put some more of that in a minute just to keep it interesting. I just became a lifetime member. We'll put some more in a minute then. We want to keep it exciting for you. Right, what is HIMS and hers? Let's start off with the information, basic information first of all. So, there is the chart over the maximum period. The market opened on September the 9th, 2019. So we're looking like 5 years now. That's the time that we've had this stock. And it looks like potentially a SPAC. SPACs don't do well typically. Along it goes, $10, $10, $10, $10, not really doing much for over a year. And then boom. So we want to see what happened here and then what happened here. We know. Hang on a minute. March 2020. March 2020 is it wasn't really a COVID play, because that was back here. But what caused this? During the middle of the pandemic, and then it all faded away, and now it's rising again. So what I suggest you do is, if you're interested in this stock, is look on the investor relations pages and find out what occurred during these particular situations. What occurred during these moments here? Might be worth checking it out. Anyway, so it's certainly volatile. If we go over the year to date, in fact, I'm going to take that back. It's not really. It's very much onward growth, really. Over the 5 years, there's opportunity to trade. But generally speaking, if we zoom in, not really a trading stock, it's more of an investment stock, and waiting a period of time, and it's trending upwards. So there we go. Anyway, what is it? HIMS and hers operates in telehealth, online health consultation platform. It connects consumers to healthcare professionals, enabling them to access medical care for mental health, sexual health, dermatology, and primary care. The company was founded in 2017 and is headquartered in San Francisco, California. The listed name for HIMS is HIMS and hers, 1,046 employees. Andrew Dudham, we'd love to have you on the show. We do what's called a Meet the CEO series. If you'd like to be on my show, the investors will reach out to you and you can be on the show either via investor relations email. They'll send you this video, and hopefully you'd like to come on and talk to me and spread the word about your company. I don't email and message anyone. I never sell my services. But people contact me through the investors saying they want to be on the show. So if you'd like to be, we'd love to share your story. We rank number 1 and 2 for most stocks that we cover. So if you'd like to be on the show, come on over. All right. So then, 2017, margin requirements. It's not regarded as super risky. 25% is the S&P 500, for example. We're at 30%. So this is looking good so far. We've had an upward trajectory, if we look at it, other than the initial pop and then sell-off. Now we're getting a trend upwards, and it's not regarded too risky as far as margin is concerned. 5 billion market cap, price to earnings ratio negative 1,461. So there you go. That's a big negative price to earnings ratio. We'll come on to that in a moment, what the price is compared to the earnings. Dividend, no dividend yield here. Average volume 11 million. Today's volume 5.62. So a little bit of volume, nothing massive. But not too bad. 52-week high, 24.65. 52-week low, 5.65. So a little bit there over the year. The Morningstar analysts are saying a buy 46%, hold 53.8%, no sales, and the earnings are consistently beating the market. I like this one, and gaining momentum apart from Q3 of 23, and we are now making money by the looks of things. So we are moving up. Very, very good indeed. Who else buys the stock? Palantir. People like innovative stocks. Palantir, SoFi, not so good. DraftKings, solid. Open Door, interesting. Shopify, and Teledoc. That kind of makes sense. Is this a Cathie Wood play? I wouldn't be surprised. Anyway, let's go and have another look at it's a sexy video. We'll do a bit of sexy stuff, shall we? Shall we do a little bit? There you go. It always keeps you interested, doesn't it? Keeps you interested because we are talking about health today, sexual health as well. So we need a few little pictures that will just keep you interested just for a moment as I change screens. Why not? Okay, let's go and look at the business. So first of all, we've got some selling going on from insiders. Let's have a little look. This is HIMS and Hers just a couple of days ago. It has reported a significant transaction by Chief Commercial Officer. The money man. Sorry, not the money man. That's not the chief financial officer. This chief commercial officer, according to a recent Form 4 filing with the Securities and Exchange Commission, Chi sold a total of 550,000 shares of Class A common stock at an average price of around 22. It's now 24 to 22,000. 22. Okay, that's the range of the share price selling, resulting in a total transaction value of over 8.6 million. So the chief commercial officer has dumped a lot of stock recently, and the share price has gone up after it because we're now at 24. That's interesting. In addition to the sales, the filing also disclosed multiple acquisitions of shares by Chi through the existing exercise of stock options. These transactions were carried out on June the 10th and June the 11th, 2024, with a total number acquired valued at approximately 4.5 million at prices ranging from 5 cents to $13 per share. Following these transactions, Chi sold a substantial number of shares, indicating continued vested interest in the company's performance. The stock's options exercised by Chi were part of a pre-arranged Rule 10b-5 trading plan, which allows companies insiders to set up a predetermined plan to sell stocks at a specific time. So this isn't really an overly negative thing. He's taking advantage of stock options and he's trimming his position. I can live with that. That's not a negative necessarily. We see this a lot. Companies do this. And anyway, investors often monitor inside transactions so they can provide insights into how company executives perceive the value of their company stock. While sales can sometimes raise concerns about executives' confidence in the company, they can also reflect personal financial management decisions rather than a change in outlook of the company's future. Exactly. Tax position, automated stuff, not on a day-to-day basis, thinking about it. I don't see a major problem with this. I think that this would be that this would be an okay thing to do. All right, HIMS and HERS, let's have a look, known for its telehealth services, has been expanding its offerings in recent years, aiming to make healthcare more accessible. The company's stock performance, our inside transactions, are closely watched by investors invested in the healthcare sector. Okay, I can live with that. Let's move on now to more about the business. Let's start with the website itself. As I've already mentioned, with my sexy images, this company is all about having great sex, regrowing hair, lose weight, tackle anxiety, have longer sex, get smooth skin. So there you go. A lot of information there. And let's have a look. It's an online service. Let's have a look at more of the products here as well. We can scroll along. Feeling stressed, burnout, want to last longer in bed. Oh, hello. The shop is open. Sex Chews. Hello. All right. Okay, fair enough. This is interesting stock for an Englishman to cover. Anyway, there you go. All kinds of mints and chews and shampoos and wipes and all kinds of stuff here that you might be interested in. Let's have a little further look down here. Normalizing challenges and innovating on their solutions by personalizing the healthcare experience. HIMS was built for you. Your health is personal. Now so is your care. Let me just zoom in there a minute. Treatment throughout HIMS starts with a personalized treatment plan based on your unique needs and goals, whatever you're looking for. An innovative treatment or a tried and true generic option. A tried and true, I beg your pardon, not tired. We connect you with licensed medical provider in your state of to assess your symptoms and health history on a one-to-one basis. The concierge approach doesn't stop at delivery, though. Through the HIMS app, you can message your care team and access curated content 24/7 at no additional cost. Like we said, we're built for you. Very interesting service. I think you'll all agree. All right, let's have a look now at how it compares to the S&P. And I'm going to like this one. There's the chart recently. You can see a lot of forward action as Caden Youngquist, who asked me to do this review, he said HIMS has always beat earnings. It hasn't always beat earnings. If I'm going to use a comment like that, I have to verify everything, and I have to verify it hasn't always beaten earnings. It's beaten earnings pretty much always. Beat, miss. Beat. We had one miss slightly in Q3 of 23 over the most recent period. So just so we're absolutely clear, it has missed just there. But nevertheless, what I like about it is it beats my favorite stock, the S&P 500. Admittedly, only over the last 4 years, but the last 4 years, we've had some growth in the S&P. Let's be honest. Let's have a look at it here. If we go here, this is back in 2020. So just 4 years. But 4 years, nevertheless, it's not insignificant. $10,000 in the S&P would have returned you 17%, including paying in the dividends. All right, so you've made a good profit. Over the same period, 10,000 to 19,000. You would have beaten the S&P with this growth stock. Very nice indeed. But we do have excessive volatility. We had an occasion here in 2020, November, not COVID, way into COVID actually, it boosted. So obviously it looks like COVID was a macro condition back in March. Nothing really happened. The company hasn't done very much yet. Mid-October, people are at home thinking, hang on a minute, I want better sex, I want all these things, I'm at home, I've got my stimulus checks, let me spend some money on all the good stuff. So the stock did pop. So it's not a COVID play technically, but it kind of comes, later in the COVID phase. I mean, we were in COVID for a few months, right? But it is October, so it is a stretch to say that. But nevertheless, it popped. Then it fell away, though. Well, the S&P carries on growing steadily because of its tech sector. It fell away. This would have been a good time to buy it back in 22. And then ever since then, it's been rising, and now it's beaten the S&P because it's risen so much since 23. It's been really on an upward trajectory. So that looks good. Let's now look at the numbers. All right, let's have a look at the numbers. And before we do, shall we visit the sexy page one more time? Because we are talking about a sexy play, and you might like all of this. And if I'm honest, how often do I get a chance to put these overlays into my videos? I'll tell you, none. I only got a chance to do it when I did Playboy. But hey, this is a sexy play. Maybe we'll get away with it. I don't know. Who knows? Anyway, let's look. Makes it entertaining, doesn't it? Let's have a look then at the numbers. Right. This valuation is reliable, and it says we're 49% overvalued. Kind of makes sense then, wouldn't it? Why the insiders have been selling, or at least the commercial officer was taking some profit. It's getting overbought. It's getting too carried away. Very often these things happen with certain stocks like this. There's something trend somewhere. Is it a good time to buy it? Like I said, back in 2023, late 22, early 23 was a good time. Maybe now is a bit expensive. Maybe it's too late to catch the boat right now. I don't know. 49% overvalued. Best case scenario, 13%. Now, a growth stock, I'm happy to pay 25% over valuation. I'm okay doing that. I can live with that. But unfortunately, this is a bit expensive nevertheless, even so. Anyway, worst case scenario, overvalued by 63%. So it's expensive, and we regard that as a reliable intrinsic value. Scrolling down. Revenue, 959, up 10%. On the most recent range back on March 30th. Expecting things to continue, which is very, very good. No massive sudden S-curve and a massive spike, but nevertheless, we are moving up in a general direction. So we like that. Things are moving up 10% up, operating income up 68%, and expecting that to continue. So that's looking good. Net income up 90% and expecting it to continue. So it's a healthy business. 22% up. I like it. What about the balance sheet? 448 million in assets, and cash is half of that. So even though I always say I like to have cash, but not too much, it's got most of its cash to work. Its assets are working, but it does hold a decent amount of cash as well. That's good. Not too much cash, but cash nevertheless. What about, I've got a fly around my head. That's annoying. Anyway, 103 million liabilities. So that's a good balance sheet. No long-term debt, no short-term debt. We like it. Scroll on down. Profitability, 43%. But it's going to improve. That's a good profit, and it's going to continue growing. So that's good. Balance sheet, as nearly as high as you will ever see. Bright green, 78. Balance sheet, great. I've not seen many higher. I think that the highest I've seen was 82. Never seen a 90 or 100. That's a good balance sheet. Good business, solid, but it's expensive. Worst case scenario, 44% downside. Average 23% downside, and a 16% upside at best. So it's expensive right now, hence why insiders have been selling. kind of makes sense. So maybe it's not the best time to buy it. Good business, beating the S&P. Can it continue? Well, it's in an upward trajectory, but it's a little bit expensive at the moment. It's got nearly 12% short interest. Makes sense. It looks like the stock is going to head down shortly. Makes sense. We've got some news just 3 weeks ago, so it's relevant. Let's have a quick listen in. What have we got here? Let's have a look.
Direct-to-consumer platform HIMS and HERS Health announcing today that it will offer an injectable weight loss drug. The generic treatment will use the same active ingredient, so-called GLP-1s, and drugs like Ozempic and Wegovy, but it will cost a lot less. It'll start at $199 per month compared to the $1,000 plus for Saxenda, Wegovy, and Zepbound. HIMS and HERS stock shooting up on the news. But is this all good news? Bring in celebrity fitness trainer and health and wellness expert Jillian Michaels. She's also the founder of the Fitness app. Jillian, thanks for coming on CNBC. I know it's not your normal stop, but these are multi-billion-dollar drugs that are giving people a lot of hope. But I also understand that most people, when they get off them, regain all or most of the weight.
Well, they do. And that's why this is a lifelong commitment, which makes it that much more important that you have a medical professional overseeing your use of this drug consistently, who knows your family background, who's monitoring you for side effects, and who, God willing, is working to help you bridge the gap towards a healthy lifestyle, so one day, arguably, you can get off of these drugs.
Yeah, and but these drugs, they are giving people, and we all know people who've probably, maybe you don't, but I do, have taken them and they've seen results and they feel good about themselves. It's not all a net negative, I would assume, Jillian. I mean, people need to have the hope, right? Hope. They give hope.
I understand completely. My position is that I could deliver the exact same results, helping you learn how to eat better, detox from all this crappy food, start moving your body. And I've done it before. I did it for decades. I have literally hundreds of testimonials on my website from people who did it just following practical advice. And the point is, yes, do people gain the weight back? Of course they do, but not all of them. And with this drug, you're going to hit that wall anyway. You plateau on it, period, and you can never get off of it, which is, quite frankly, terrifying. This is a marriage, not a fling, and the drug has really serious side effects.
The side effects, and by the way, anybody taking them or thinking about taking them need to read, talk to their doctor. And I think that's your issue, is that this is direct to consumer, maybe using a teledoc, right? Not your doctor, like somebody on the other side of an app who doesn't know you, doesn't know anything about you. You could lie to them easily about your overall health condition because you really want the drug, right? This should be a much more personal doctor-patient decision, I think.
You are 100% spot on. There is no doctor I've interviewed about this drug that hasn't said exactly that when it comes to telehealth and GLP-1s. Period. And the bottom line is that people are having dosing errors. You've got a 1,500% increase to the emergency room because they're off on their own, having gotten their medication in the mail. Or what if they do have an eating disorder and no one's there to monitor them, to catch it, to provide help? The bottom line is that this is a serious drug. And if it is something you choose for yourself, please, by all means, keep yourself as safe as possible by having a very qualified doctor who really cares about your health overseeing your care. And there are certain doctors who won't even put certain patients on it because of their family backgrounds. They don't have the luxury of losing the kind of muscle mass that you lose on these drugs. And the list goes on and on and on. Telehealth with GLP-1s is a bad idea.
Yeah.
Okay, so now we've learned what the big drive and the big push is on this stock. It's to do with these weight loss pills, people taking those. I'm not a great fan of that, I have to be honest. As you've heard there, I mean, that was her opinion on it. But I mean, my own opinion is you don't want to be taking drugs just to lose weight. Most people just need to move. If you sleep well, drink water and move, 98% of health issues are sorted out. People don't want to move, they don't want to drink water, and they don't sleep very well. Take a tablet and it fixes it. It's never a long-term plan. So if that's one of their big plays on this business, then I think that's a sort of thing that can fade away quite quickly. And that makes sense why it's popped up. So last 90 days, the stock, a lot of positive sentiment. Last 30 days, a bit slightly more. Last 7 days, fallen away a little bit, and today there's no news so far. So let me give you my final thoughts on this stock. So let's have a little final thought on HIMS and HERS. So it's an interesting business. Obviously, people like it. They've used it. It's outperformed the S&P, but there was a very sudden pop back in 2020, the end of 2020, end of COVID. Then it fell away, and now we've had the resurgence. Now we've had the new thing with the weightless drugs. Lose weight drugs. They've got one that's cheaper and all the rest of it. That's a massive boost for their business. Don't think that can last forever. I think these things come and go. So that's not really an investment idea for me. It has beaten the market, but only because of that massive surge. It could fall back again. It is overbought right now, massively overbought. Wall Street expect it to go down. It's being heavily shorted at the moment. So if you were buying it, you might be buying it for a short position. Insiders have been dumping it by increased levels. Its balance sheet is good. Its profitability is good. But, it's been doing well. Is it going to continue doing well? Well, Wall Street don't think so. Looking at the financials, it's a steady growth. They're not expecting or planning for an S-curve, something that's going to break out and really push forward. They're expecting things as normal, but this might not remain as normal. This might suddenly become out of favor, out of trend, and drop down. So my thoughts are, ethically, I don't like this kind of product. I think it's better just to get off your ass and take some exercise and eat well and sleep well and drink some water than taking pills. If that's the thing that's driving the business, I think it can be great from a financial standpoint for now, but it can fade away. It's too expensive right now. It's got overpriced. Insiders are selling by increased amounts. So that's another downside. Wall Street don't like it. So it's beaten the S&P because of this sudden rise. Sudden rise could go away, and we've seen it on the back test chart. So it's not a buy for me ethically. Financially, is it a buy? No, not at the moment anyway. If you like this sector and you believe in a weight loss drug, you probably like it, and that's okay. That's fine. That's your prerogative. But you might decide that it's best to short the stock at the moment because it's overbought, it's overvalued. Wall Street are thinking it's going to go down. Is this trend going to continue? I'm not sure. Insiders are selling it. Short positions getting bigger. Sentiment is a little bit negative towards it now. Well, at least that lady's view is. That's not the general census, of course. Caden Youngquist, who was the person that asked me to make it, says, I'm holding it until next earnings. I think that's probably a good idea because you get volatility on the earnings. The earnings is expected August the 5th. We are in an upward trajectory at the moment, so I would say nothing's going to suddenly change overnight for this, even if I have said, it's not for me and it's probably a trend that will die out. Not overnight, it won't. These things can take years to fade out. Look at the popularity of OxyContin. Awful drug, one of the worst things ever invented, and it made the company billions of dollars and ran for years. So, not saying it's as bad as that, but what I'm saying is you're probably going to get another or because of this trajectory in August, you're probably going to get sentiment think it's going to continue. However, insiders are selling now. I think Caden's probably going to play it right. He's waiting for some volatility coming up to earnings, and there will be. Even if it ends up being a disaster, things slow down, people decide they don't want it anymore, it gives up. I think he's right in saying it can grow until he's right. I think it can grow until the next earnings. Okay, so in response to you, Caden, I would say holding it to the next earnings with a bit more of a pop would be good. However, you just added another comment underneath, and you've said in at $11. Now then, that changes the story slightly, because you have already 100% your money. You said you're in at 11, it's now 24. You've doubled your money. You've made 10 years of the S&P in a year. I don't imagine you've been in this very long, because I know you're only 18 years of age. You've made 100%, so maybe you've only owned it a year. 100%? Knowing it's likely to go down on the next earnings. I know you're hoping for the volatility leading up to the earnings. You've just said that you will consider, you're thinking of holding it until the next earnings. So you are thinking of selling it. I would like to be, as I always try to do, I set my own trends. I am proactive, not reactive. I'm not looking for a move after everybody else moves. I would be happy with 100% profit, knowing that it's overbought, knowing that it's overvalued, knowing that insiders are selling it and increasing, knowing Wall Street are giving very, very low expectations, and you've made 100%, I would be out of that 100%, because, and I'll tell you for why, not only do I think you've been in it for 1 month, so you've made 100% in 1 month. What the bloody hell are you waiting for then? What the hell are you waiting for? 1 month. I mean, seriously, 1 month, 100%. And the other thing to consider is I believe the S&P is a 624, that's VU, $625 within 12 months. We've got another 8% left in it this year. What I would be doing if I was you, because it's never about one move, is it? It's one move, at least 5 moves ahead. I would be selling that now, knowing it's overbought, knowing it's likely to come down. You've made 100% profit. I would take my money. Thank you very much. I've had a really good run, and I'd buy the S&P, knowing there's at least 8% left this year, and price targets on average are in far excess of 500. I'm thinking 625 within 12 months. That would be a much, much, much wiser thing to do. You've got all that money. You've doubled your money to do it. Why would you not do that? I can't think of a reason why you wouldn't want to do that. The only reason I'd imagine is you think it's going to keep going and going to the earnings, and it may do, but so is the S&P. And now what do you do after that? You take your profit, and then what do you do then? I wouldn't risk that. I would take 100% and buy the S&P today. Anyway, there is a review with a discussion with the member that asked for it to be done, Caden Youngquist. There you go. So very interesting review. So click above my head for all the links, martynlucas.com. You'll also find the Alpha Spread link. That's the software that I use. You can go and check that out of all the software that I use. My members can get a free plan of that, so you might like that. And below in the description, you'll find the link for there as well. If you go to martynlucas.com above my head, just scroll down, you'll find all the links to everything. Over here, I shall put my Alpha Spread reviews. I've done nearly 200 stock reviews now. Down here, I'll put Sensei's The Oracle of Investor Street. He does all the charts for these stocks. And if you join him on Sunday, he's live nearly every Sunday. If you join him on Sunday and ask him, if you're one of the members, to do a technical buy and sell chart on this stock, he'll do it for you. And then you can see the actual support lines and sell zones and all the rest of it to get out and at the best time. But I would be taking my profit and running and buying the S&P before the S&P carries on going. That was what I would do. Anyway, until next time, as always, take care of yourselves and each other.